I appreciate you taking the time out of your afternoon for this very important conversation. I know there's a lot of information out there, so we're trying to do our best here at the Bridgeport Regional Business Council to disseminate the information as it becomes readily available. I know things are changing on an ongoing basis for all of you. So I did want to just welcome you all. As you may know, the Bridgeport Regional Business Council also represents the Bridgeport, Stratford, and Trumbull Chambers of Commerce. And we're happy to have also the Greater Valley Chamber here, and Bill Purcell, the president and CEO of that chamber, is on the call, and he'll make a few comments momentarily for the businesses of my hometown, Shelton and Derby, and the rest of the Greater Valley. And we're also welcoming the Fairfield Chamber of Commerce in Beverly and her constituency in Fairfield, as well as the folks in Monroe and Ray Giovanni's group up there in the businesses in Monroe. So thank you all for joining us. We're also joined on this call by Deputy District Director for the Connecticut office with the SBA, Julio Cassiano, as well as Deputy District Director, Jimmy Ticky, out of Congressman Himes' office. And thank you, Congressman, for your time this afternoon. I'd like to just open it up to Bill Purcell, and we can get started with the program. Thank you again. And for all of you on the call, if you haven't, mute your lines, please, just for the courtesy of everyone else on the call. Thank you very much. And then we'll also be fielding any questions via the chat if you're on the web browser. And as time allows, we'll try to open it up to some other questions as well as we move along here. Thank you very much, everyone, and enjoy this informative session. Bill, go ahead.
Yes, thank you, Dan. This is Bill Purcell on behalf of the Chamber. Thank you, Dan, for the opportunity to join with you and your family of chambers, with Beverly and Ray and Fairfield and Monroe. I'll just say communication is everything. And Congressman, all of the chambers across the state have been in regular communication. In fact, we have a conference call at 2:30 statewide with all of our chambers. So I want to thank you, first of all, for and your very able District Director, Jimmy Ticky, my dear friend, for sharing the wonderful summary of the CARES Act, which we have distributed to our members, which is an excellent document. And we look forward to your remarks about this health crisis, how we're responding in Congress, and the economic crisis that it has spawned. I will just say this is a critical time, as you know, and this week in particular, I think people are very, very much on edge as we reach the apex across the country. So we're anxious to hear your words with your strong background, and thank you for your support up here in our valley, in Shelton and Oxford and throughout the valley. So we look forward to your remarks and to a wonderful, spirited discussion today. So, Congressman, the floor is yours.
Bill, thank you. And Dan, really appreciate you gathering this group together. This is a moment all about conveying information. It's been a funny couple of weeks in the sense that, it was just 10 days ago that I jumped in my car and drove down to Washington to pass this $2.2 trillion bill. So like a lot of you, even though I had an advance look at it, I'm still in the process of making sure now that it's been passed that it's actually getting aid to the people and the institutions that need it, and the small businesses and nonprofits, et cetera. I'll limit my remarks to just sort of 5-ish minutes up front, because I've got some just some general things to say, and then some timing things to say that hopefully are valuable. And then I'm delighted to answer questions along with Julio at SBA and my staff, because there's obviously a lot of very complicated elements that rise up from the plans that have been put in place. It's going to be hard in this context for us or for the SBA to provide very, very specific advice for very, very specific questions for individuals and businesses, but we'll try. And if we can't accomplish it on this call, there's lots of organizations out there like the SBA, like my staff, like SCORE, and other groups, Women's Business Development Corp, that are working with small businesses to make sure they get taken care of. Really quickly, let me just run through the big programs that are of relevance to individuals and to businesses, and give you what I know about timing. First and foremost and fastest will be the aid that is to be delivered to individuals. This is the famous $1,200 check that will be sent, or $1,200 payment, I should say, that will be sent to everybody with a Social Security number who makes under $75,000 a year on an individual basis, obviously 2x $150,000 a year for a couple filing jointly. That $1,200, and the reason I give you that limit is, as you probably know, above $75,000, the size of that $1,200 check begins to decline to the point where it disappears at $99,000 in income. And that double those, and you get what happens for a married couple filing jointly. There's also a $500 per child benefit. So bottom line, family of four with people making less than $150,000 will actually receive soon $3,400. 2 adults, 2 children, 2 times 500 plus 2 times 1,200. That will be, and here's maybe the important part, because most people have heard of that program. For those who filed either an 18 or a 2019 or 2018 tax return with direct deposit information, that will be delivered electronically, roughly speaking, in the next week or so. For those people who don't file a return, but are recipients of Social Security, and we're talking chiefly about the very poor or a lot of our retirees that are on either SSDI, disability, Social Security disability, or SSI, traditional Social Security, they will receive payment in the same form that they receive their Social Security monies through that mechanism. That too will happen hopefully in the next 2 weeks or so. So retired, not retired, anybody with a Social Security number with income under $99,000 will receive something. Below $75,000, receive the full $1,200. So the problem we have there, of course, is individuals, and we're talking about a relatively small population, who neither filed a 2019 or 2018 tax return nor have any sort of interaction with the Social Security system. We're going to work on that. The IRS and the Social Security system are going to put up some form of very brief online form that you can fill out. Boom, it'll be verified. You'll get your check that way. Second program I want to talk about, just to keep it short up front, of course, is I think what's most relevant to this group, which is the various loan mechanisms that have been funded by the CARES Act. And there's 2 that I will feature, but I will also invite Julio from the SBA to elaborate once I'm done speaking. The 2 loans that are attracting all the attention that I think are going to provide a lot of benefit to our small businesses and to our nonprofits, and believe it or not, to our houses of faith. That was a learning for me. I didn't know that we could deliver this kind of service to religious institutions under the Establishment Clause of the Constitution, but yes, churches can apply. There's 2 main programs. The first that is getting all the attention right now that most of you are aware of is the Paycheck Protection Program. This is a traditional 7A loan, but it has very different terms. It is largely forgivable for wage-related expenses, for utilities, for rent, for mortgage payments. If that loan is funded and used for those purposes, that funding will be forgiven, and it will be essentially a grant to pay for those qualifying items. The interest rate is low. The terms are very soft. I won't go into the details here. You apply the same way you would apply to a 7A lender, which happens to be most of the banks in the state of Connecticut. And that process is well underway. Last Friday, banks started taking applications. Now, there is good news and bad news here. $350 billion was set aside for that program. That is not going to ultimately be adequate to the demand for the program. And it is a first come, first serve arrangement. I wish that everybody could get everything they wanted instantly, but that's a very real constraint on the program. Right now, the banks, and I spoke to 2 of them this morning, are overwhelmed with demand, but they are actually processing applications. And my understanding is that nationally, roughly $38 billion, or a little more than 10% of the program, has actually been approved, not funded, but approved. Banks are still waiting on closing procedures and closing documents because remember, this thing didn't exist a week and a half ago, so the Treasury and the SBA are working nonstop to get all the mechanisms out there. So that Paycheck Protection loan, Paycheck Protection Program loan is absolutely something to check out if you are a small business, which is a complicated definition, but the rule of thumb is under 500 employees. If you are an independent contractor, you can apply. If you have a small business, a sole proprietorship, you can apply. Pretty much all small businesses qualify for this loan, as do nonprofits and, as I said before, houses of faith. The other program that I did want to touch on, just so that you're aware it's out there, of course, is the Emergency Economic Injury Loan, sometimes called an EIDL, which is a slightly more traditional loan that you apply directly to SBA.gov for. You make the application online at SBA.gov. These are low interest rate loans of up to $2 million, with principal and interest deferment available for up to 4 years. Upon application, there is a $10,000 grant, if you will, made available to the applicant that does not need to be paid back. That, of course, is designed to provide some aid very, very quickly. I'm not going to get into the details of that, but those are two programs that you should be aware of because they are up and operating right now. The last thing I want to touch on, because it is relevant to the calculations and thinking about employees, because of course every business out there right now is badly stressed. The CARES Act fairly radically expands the unemployment insurance program. And so a program that traditionally delivered in the state of Connecticut $649 a week of benefit to people who had been laid off will now be much larger. It will be longer. It will be the traditional 13 plus 26 weeks now in duration. The size of the weekly check will be expanded by $600 to reach to $1,249 per week in the state of Connecticut. The program will expand to, for the first time ever, include gig economy workers, your Lyft drivers and your people who work in the gig economy, and the self-employed and independent contractors. Now, again, it would be wonderful to wave a magic wand and to see that money on the streets tomorrow. No unemployment insurance program has ever contemplated taking on individual independent contractors or gig economy workers. And so as we speak, the Department of Labor in the state of Connecticut is working very hard to build the systems and build the administrative and bureaucratic overlay to allow for that to be possible. Bottom line there, people applying in a more traditional fashion, an employee who's been laid off should get their application processed and start to see checks sometime in the matter of the next couple of weeks or so. For the gig economy workers and the independent contractors, I would anticipate longer than that. I don't even want to speculate as to how long it could take because, again, it's a whole new program without any of the infrastructure designed to deliver that money. But of course, we're talking about a lot of money here. And so the state and the federal government need to make sure, and the banks that are extending the SBA loans need to make sure that obviously they are minimizing waste, fraud, and abuse. So these systems need to get built. So with that, Dan and Bill, why don't I pause there because I don't want to speechify at length. I'd really like to get to the questions that that people have about these programs.
Sounds great.
Quickly, Dan, to the Congressman, is there a dollar limit? Is there a cap on the expansion of unemployment? The numbers are daunting across the country, 10 plus million and mounting. Is that capped as the other dimensions of this program are?
Bill, it is. There is a finite $2.2 trillion size on the bill. So yes, it is. I think that the calculations were done, and of course we're seeing layoffs and people becoming unemployed at a rate that is historically unprecedented. But my sense is, Bill, that that's not an issue yet, that the modeling has made the funds available to be sufficient. In contrast to the Paycheck Protection Program loan, where I think right out of the box we knew it would not be of a size to meet demand. I should mention, you give me a good opening, Bill, there. There is a general realization on the part of the Congress that the CARES Act is probably not the last word on this crisis. If we are surprised by the speed with which the coronavirus disappears, and 2 months from now, we're all back to business, the CARES Act may suffice. Obviously, it doesn't make everybody whole, and there's still a lot of pain out there. but there is a general acknowledgement that there's going to be another chapter, and the Congress is already thinking about. And by the way, I would solicit and be very happy for suggestions on what gets included in the next economic relief bill.
Great. Yep, terrific. Go ahead, Dan.
Yeah, so just reading off some of the questions we're receiving, Congressman. You mentioned the independent contractor, the gig economy. Just to clarify, does that also include the LLCs?
So LLCs will be eligible to apply for the Paycheck Protection Program loans, as well as for the emergency injury loans I was talking about. Yes.
Excellent. And there was a question that came in regarding the rebate checks. I think you touched upon it before, but rebate checks for the self-employed that have already filed taxes. What's the timeline that you're expecting or anticipating, or you've heard in terms of those checks getting sent out? Yeah,
so if you file an individual 1040 and you have given the IRS your banking information, your direct deposit information, you will be at the front of the line to receive that payment. Now, there are the income limits, which I won't go into again because I did it already. But if you have already filed either 18 or 19, and if you think about it, this makes it worth thinking a little bit about, because if your income went below $75,000 in calendar year 2019, and you haven't yet filed 2019, you should, because you'll get more of that rebate payment, as you call it. I haven't figured out quite what to call it yet, the $1,200. And obviously the IRS has given people the ability to postpone filing until July and postpone paying if anything is owed. But it might be in people's interest to accelerate their filing of that 2019 return if it results in a more rapid or a larger payment of that $1,200 payment.
Okay, thank you. So we had a question come in prior to this call from Oxford regarding the PPP loan, where most of their employees are all 1099 contractors. And this particular center is an LLP, but they haven't taken a check out for themselves at this point, paycheck for themselves and their business. And it's relatively fairly new. Is there a recommendation or suggestion for them to try to weather this?
Yeah, so the way the program is structured, Dan, a business that employs a lot of 1099 contractors, there's a lot of service businesses that look like that. Those are not considered employees for purposes of the Paycheck Protection Program loan. So if you have 4 administrators in a business that sits atop of 24 1099 service providers, you are a business with 4 employees. And the application for a Paycheck Protection Program will be about those 4 employees. The 1099 independent contractors may be able to apply for their own forgivable loan. They will be able to apply for new and expanded unemployment compensation, but they will not be counted as employees to calculate the size of the Paycheck Protection Program loan.
Okay, thank you.
And by the way, I know we've got Julio on. I think I'm giving good information, but I'm going to explicitly invite Julio if I shade something wrong to jump in and correct me or to expand on what I'm saying.
No, Congressman Himes, you are right on target. I'm just listening to you. It's like if you work for us. Thank you. The information is correct. If you're a 1099er under the PPP program, and this was news to us that those individuals would have to apply separately under the PPP, and the owner would just account for his direct or her direct payroll.
Dan, can I jump in?
Absolutely.
Yeah, Congressman, I want to go to a 30,000-foot view and talk a little bit about the Defense Production Act. I'll first say that, the Chamber is broadly representative of business, both large and small, the nonprofit community. We have many of them on the line. We're very concerned, as you are, about our hospitals and the caregivers, our nursing homes, where, sadly, many of these fatalities have been occurring. The private sector nationally has responded. We have one wonderful example here in Shelton, a manufacturer that's completely retooled to produce by the thousands face masks or shields privately in response to the crisis. So tell me your views about what is happening. How do we ensure that our caregivers on the front lines of our hospitals, senior care centers, our EMTs are protected through this crisis?
Yeah, Bill, let me address that very quickly. And then what I might do, if Dan's okay with it, I see a bunch of questions coming up on chat that are good questions. I'll try to hit a couple of them before I hand it back. Bill, you're touching on something that is kind of consuming 12 hours of my 20-hour days these days, trying to get out of the federal repository as much PPE as we can. You know, here in this part of the state, we are dramatically harder hit than the rest of the state has been. So I've been working to try to make sure that those areas like New London that have yet to be hit intensely are conveying assets up to the central clearinghouse that the state is running. And then there's a lot of private philanthropists, including some very sizable private philanthropists down here who are out there purchasing N95 masks and ventilators and that sort of thing. But it's been a real hooker by crook effort. As I said to a reporter yesterday, you know, so far so good. We haven't had a truly tragic situation where somebody has been denied an ICU bed or a ventilator, but it feels like we are, you know, half a step ahead of the tiger on this. And we clearly have not yet peaked. I'm not going to get into the federal politics of this, but, you know, obviously in a certain number of organizations were caught off guard by the demand. And so, yes, the president, in my eyes, belatedly invoked the Defense Production Act. But that's a fairly long supply chain, right? I suspect it is true that 3M is making masks far more rapidly than they were 2 weeks ago. But, you know, there's still a fairly lengthy supply chain between that happening and those masks arriving at Stanford Hospital. So in the interim, we're really just sort of pulling out all the stops. And, you know, I mean, everything, you know, no problem is too small. You know, when some contractor has a box of N95s in his garage, we figure out a way to get them to Norwalk Hospital or Stanford Hospital. If I could really quickly just clean up a couple of questions here that I'm seeing on chat, and then I'll hand it back to Dan. Rick is making a point here that the unemployment rate of $1,249 is more than the money that his nonprofit staff make per hour. And then he says there's no reason for my employees to stay employed at the unemployment rate. Two things to say about that. A lot of the CARES Act is designed to deliver money to people who are in a lot of trouble right now. It's not designed precisely to the $15 an hour guy differently than the $20 an hour guy. To your point, however, somebody must be let go in order to qualify for unemployment insurance. And I understand that sets up strange incentives, but somebody can't quit their job and collect unemployment insurance. So again, this is not designed to be super precise and to hit each individual case. What we were trying to do was get money into the hands of people who are going hungry or not buying their medicine. But to address your specific problem, to collect unemployment insurance, you actually need to be let go. You can't simply quit and qualify for it. Checking on the progress, Abby Tent asked, is there any way for me to check on the progress of my EIDL loan application? EIDL is a directly SBA administered program. So Julio, I would ask you if you could give us a quick answer on if there is a way for people to check on the status of an EIDL loan application.
Yes, there is a 1-800 number. You have to call 1-800-659-2955. So that's 1-800-659-2955 would be the disaster center, which is up in Buffalo. They should be able to provide you with an update on your loan. There is also another question on the $10,000 grant. I know that on the system it said 3 days. On a conference call I was on Sunday, there was a delay. Hopefully between today and tomorrow, you should be getting notices on that money.
Thank you, Julio. By the way, I can say things that our civil servants can't. You're going to need to show some patience here. As you might imagine, there's not an institution or department or division on the planet built for the tsunami that we're experiencing right now. So yes, of course, it's going to be hard to get those applications into 7A lenders. SBA.gov will get overwhelmed. So we're going to have to show some patience on all of these mechanisms because they're operating at somewhere between 10 and 100 times their design capacity. Dan, I don't want to jump the queue on questions, so why don't I hand it back to you to control the questions.
That's fine. That's fine. If you're going to pick off the stuff on the chat, go right ahead. That's fine. I have a list of questions, but I did want to just piggyback off what Julio just said regarding, because we're getting a lot of questions. I suspect my colleagues, the other chambers, are getting a lot of questions on the timing. Julio mentioned the 3 days, and people are still waiting to hear back. So I appreciate you clarifying that, because we're fielding a lot of calls, and you don't want to overstate something or misinterpret what the expectation is. So I appreciate that.
Yeah, my understanding, even on the EIDL loans, that because the first round, which was enacted back around, Connecticut was one of the first states, the third state in the nation to be declared a disaster. So they took an early lead, and we started processing as far back as the 16th of March, most of the applications. And then it's been dribs and drabs because we've been ramping up, as the congressman said. There's a lag between the time that the declaration was made, SBA's ramping up. We've had a hire cadres of employees around the country really trying to get up and running. But from my understanding, the EIDL loans that came through within the first round, you should be getting some responses to your amounts, or some underwriter should have been contacting you in the last 2-3 days. You might want to reach out to me, and I'll try, or call that number that I had given out earlier, because they have the direct information to reach to your file.
Yeah,
Julio, can you give that number? Can you give that number again slowly, because some people may need it again.
Yeah, it's 1-800-659-2955. I'll repeat it, 1-800-659-2955.
Thank you very much. I just put the number in the chat too, for those of you who are on the web as well. Thanks, Julio. Now, is there a concern at all with the money just running out, and I know there's this impression that it's a first come first serve with a lot of these banks, and they're trying to process this stuff. So we've gotten a few questions on, okay, what do we do if we're like back in the queue and the money runs out? What's the next? Is there another round? Like what are we trying to forecast through this?
Yeah, Dan, that's one of those questions that guys like me are always reluctant to answer, but I'm just going to answer it honestly. There is no way the $385 billion is going to be sufficient. It is a first come first serve system. Again, that means that folks that have pre-existing banking relationships are probably going to get satisfied, whereas your more marginal businesses without pre-existing banking relationships may get left in the cold. And it's an uncomfortable thing too, because it creates this sense of scarcity that means that the banks are that much more overwhelmed with applications. So the one hopeful note there is that there is a general acknowledgement that that's not going to be enough. And I think that there is broad agreement in the Congress that if the program proves successful, which again, there's lots of people waiting in line and not getting phone calls answered because it's only been 3 days and it's essentially free money. And the economists will tell you what happens when you offer free money in terms of demand. But there is an acknowledgement that across both parties that this program is going to need to be increased in size. Great,
thank you. See if I can balance. I think you answered a couple questions there that came in related to that. Okay, so how about, so this came up too. So some banks appear to be positioned to process these loans very well over the last couple of days. Others are picking up the pace. A little bit of a rocky start. But I guess there's a concern too with some of the banks, the smaller banks in particular, that are trying to get geared up for this. Are we able to provide, or is there any assistance for those banks to kind of get ramped up to speed so that those businesses, because what we've been communicating, what the banks have been communicating, is do business with the bank that, or apply through the bank that you're doing business with. So some of these banks that are not in the best position, like how do we, and these businesses, how do they respond to that so they're not left behind?
Yeah, it's interesting that you asked that question, Dan. My experience so far in talking to bankers has been that in some cases, the smaller banks I was talking to Liberty Bank today and Fairfield County Bank today. The smaller banks that are a little less automated than the Bank of Americas of the world are actually having a better throughput on application, because again, they're just used to sort of sitting down with borrowers, and they have people available to do that. Whereas, Bank of America is used to actually, originating these loans largely in an online environment. So at least when I talk to the bankers, and I'm sure there's lots of variation out there in terms of their experiences, what they're saying is we are working hard as we've ever worked, but we're actually getting these applications processed. There's a backlog, absolutely. In terms of banks that are having trouble, I'm not sure I know the answer to that question. I would like to believe that the SBA has some resources. I don't have a ready resource that I can offer up to a bank that needs training in this process. I will make one other observation, and this points you in the direction of perhaps starting with whoever you have a banking relationship with. What I'm hearing that one of the big bottlenecks is when a bank actually needs to run through the full-blown know your customer and BSA reg and all the identity and beneficial ownership stuff. That is a fairly lengthy process, and one of the reasons why I think a lot of banks have sort of put their pre-existing relationships at the front of the line.
Dan,
what I could add to that is that our staff I have a couple of people that are in the staff that all they do really and we're on the call from 6 in the morning until about 6 or even later at night, responding to all the lenders. At the beginning, back on the 15th, most of the loans were coming through SBA, through the EIDL program. And it wasn't until Monday or Friday when the kickoff through the PPP program began that a lot of the lenders were caught in between. Some already were on our system and they knew how to process SBA loans. Some lenders haven't used SBA for a while and they needed to be brought back up to speed. And other lenders have not used SBA, and those were the ones that we've been trying to work with because they needed to have access to our systems, understand the program, and that takes time and hours. And so we've been spending quite a bit of time. Most of the lag that has been in the last couple of days have been for lockout problems where the lender has locked out of our systems and we've had to engage with them. But when you look at it nationally, we're talking into the thousands of lenders nationally that have had problems. And so there's this issue with how many people were in the back room trying to service this. And so we've been working around the clock over the weekend. And I think those issues have been addressed recently because that's been dropping from the calls we've been getting. The calls we're now getting are more technical that have to do with the how do you process these questions within the application. And so that's where we've been spending more time trying to understand the reg and the regulations between Treasury, SBA, our standard operating procedures, on. And that's been what the lenders have been more trying to understand. What do these regulations mean?
Dan, if I might jump in for a minute to the Congressman.
Of course, go ahead.
Yeah, Congressman, I want to say the governor and your friend, Commissioner of DECD, David Lehman, have been doing a great job staying in touch with the business community. Dan and I and all of the chambers were on a call with some 5,000 businesses a couple of weeks ago. There's another call scheduled for Thursday afternoon at 1 o'clock as well. But I know that the CARES Act also had provisions to support our states to reimburse for the expenses. The governor, of course, talks about the rainy day fund, that we do have, some liquidity. But tell us about keeping the states whole and what might be in store for Connecticut to mitigate it against, additional tax increases on business.
Yeah, that's a great question, Bill. Because of course, with the decline of economic activity, the revenues are going to be severely impacted. I can't give you the ins and outs of the rainy day fund because it's kind of not my lane. But I can tell you that the CARES Act set aside $350 billion to go directly to the states to try to plug the budget holes that are going to emerge here. And by the way, states and municipalities, right? That's not designed just to be used for states. Connecticut is going to wind up getting about 1.5 billion-ish of that money. That will be sort of general resources that are there to try to plug these holes. And then there are any number, in a $2.2 trillion bill. I mean, just to put that in context for you, that's bigger than the annual discretionary federal budget. Not if you include Medicare and Social Security, but that's more money than we budget for the discretionary budget every year. There's lots of little pockets in there too that, for example, the Department of Labor needs to overhaul its systems to handle the new unemployment insurance thing. And there's going to be $12 million made available to the state by the federal government to do that. And then there's a pot of FEMA money, FEMA, which will be out there. They'll be the ones paying to build the auxiliary hospitals, outside of the Stanford Hospital, that kind of thing. They've been given $45 billion to build themselves, but also to cover the costs of our first responders and our state emergency services. So there's just a wide array of pots of money in this bill that hopefully will serve the purpose of making sure that we don't layer in a massive budget crunch on top of a health and economic emergency.
Okay, thank you, Congressman.
Thank you, Congressman. Another question I've missed, and I apologize to go back to the 1099s, but a question did come in earlier regarding the 1099s and some feedback they've been getting on the payroll service providers handling of the payments for the independent contractors, whether they should include or not include in the monthly average payroll cost. So they were looking for some clarity around that.
This is for the Paycheck Protection Program?
Yes.
Yes.
So let me take a stab at that, and then then maybe Julio can elaborate or fix whatever I get wrong. When you make an application for a Paycheck Protection Program loan, you go to a bank, a 7A lender, and again, that's most banks in Connecticut, I think all of them. And the way they calculate the size of the loan is that you show evidence of your payroll, not 1099 payments, your payroll. And I think they also look at evidence of what you're paying on a regular basis for rent or mortgage. And the size of the loan is conditioned on that set of numbers, and the forgivability is determined by that set of numbers. Meaning, so long as you use the money to continue to pay those individuals and pay those expenses, that money becomes forgivable. Julio, did I get that right?
I'm telling you, you could come work for us. That is correct, and that's in the PPP program. That's exactly how when the Treasury issued the language, that's exactly what it came out as, where the 1099s are now treated separately from the employer. Great,
thank you. One of the questions we received earlier as well is someone that has started a new business. And they're looking to see if there was consideration taken for determining the amount of money families will receive rather than going off of of the old tax returns. So for instance, their current income is a third of what their tax return would have shown in 2018 or 19. Was there other considerations before we made the decision on how to process that?
Well, let me make sure I separate these things. So it sounds like you're talking about the $1,200 payment.
Yeah.
And so it's a very simple calculation. If your tax return, your last tax return showed some income in excess of $75,000 per individual, that $1,200 will be reduced downward until you get to $99,000 in income, at which point it's reduced to zero. If that was your 2018 experience, but in 2019, your income, I don't know if it's true in the case you were talking about, but your income was significantly reduced, that's a case where it would make all the sense in the world to file a 2019 return with your actual much reduced 2019 income. And by the way, there was a question on the chat. It is based on adjusted gross income. AGI is the number that matters there, not net or whatever else. It's AGI. So if you did in fact see a substantial decrease in AGI in 2019, you should do one of two things. You should either file your 2019 return so that the IRS just ticks that box and sends you the $1,200, or there will be an opportunity, and I can't tell you exactly what it looks like. There will be an opportunity if there was a sudden decrease in income to true up that $1,200. I can't tell you how that's going to work, but if there is either an overpayment or an underpayment over time, that will be trued up.
Great, thank you for that clarification. A question related to the PPP program.
There's a related question on the chat, Dan. Stephanie is asking, what type of proof of income do you need to bring to the bank if your income increased a lot in the last 6 months? We got to keep these programs separate, right? So if you go to the bank, you're going to the bank to apply for a Paycheck protection loan. And the bank is going to want to look at your payroll. And if they're going to look at your payroll, and for all of your employees that are making under $100,000, and this hasn't come up yet, so it's worth spending a second on it. If you have an employee who's making $75,000, great, no problem. If you have an employee that is making $120,000, the government will only forgive the Paycheck protection loan in the amount that goes up to the $100,000, not to $120,000. And let me be very clear about that. The $120,000 employee, it's not that they don't qualify for that paycheck assistance. It's just that the $100,000 is a limit. And you understand why the government did this, right? They don't want to be providing, basically paychecks for people who are making a lot of money. And so that's the question was, what if I go to the bank? So the bank cares about your payroll. Your income would suggest that you're actually looking and talking about that $1,200 payment, because that's the one that is keyed to income. Has nothing to do with the SBA or a loan. That's just $1,200 that gets paid to you based on your income.
Great, thank you. Now, how about for businesses that have just started in 2020 that haven't really have a history of a tax return or anything like that?
Yeah, so this gets a little fiddly, but let me give you the general rule. This is available to businesses that were established and had expenses, demonstrable expenses, before February 15th of this year. There's some guidance that said that the reason it gets a little complicated is because you've got seasonal businesses, right? Spring contractors, that sort of thing. So it gets a little complicated in the world of seasonal businesses. But the general rule of thumb is that if your business didn't exist before, if your business or its expenses didn't exist before February 15th, which is what, 6 weeks ago now, seems like an eternity, you may not qualify. You understand why that it's not designed to sort of fund payroll for a business where somebody just thought of this business 2 weeks ago. So that's my understanding of the dividing line.
Excellent.
Dan, may I jump in, because I know we're getting close to the hour. I want to just leave with a thought, Congressman. We are indeed our brothers and sisters keepers, and I want to thank all the bankers that are on the line, the 50 or 60 banks and credit unions across the state who've entered into a mortgage forbearance program. We think of our folks that are out of work and are on unemployment, and suddenly that $1,800 mortgage comes due. So thank you to them. Thank you to the utilities, the landlords, myself, mine included, that are offering forbearance. As you know, cash is the oxygen of business during this very, very difficult time. And then just to underscore all the extraordinary acts of generosity, we've established a fund here with the Community Foundation to support our most vulnerable in our community. I know there's a question here about caring for the homeless and the disabled, and in true Valley fashion and Bridgeport fashion and Connecticut fashion, we're all just amazed at these acts of kindness and generosity. So thank you for your leadership, Congressman, and for keeping us informed as this continues to unfold.
Thank you, Bill.
Thanks, Bill. So we are coming up on the hour. I did just have I guess for business practice, standard business practice, one of the questions, that we received, but we've been hearing that some folks, with the guidance changing pretty regularly over the last week as we're trying to navigate all this, some folks that may have been denied. What is the recommendation? There's been some conversation because the guidance has been changing to reapply, and they may be able to, get something out of the program. Is that a good recommendation for some of these folks, or do you suggest some other avenue, as well as the self-employed folks? This is kind of two questions. There's been some conversation that those folks should wait until April 10th to apply for that application. I'm not sure where that came from, but I know that I've heard that a couple times over the last couple of days.
Yeah, Dan, not so much that the guidance has been changing dramatically. The big problem we had last week was that there wasn't any guidance.
Right.
And the banks were ringing my phone just saying, hey, the Treasury Secretary announced that this program opens on April 3rd, and we got no guidance. The good news is that the guidance has been coming out on sort of a just-in-time basis, and it has been pretty flexible. I'll give you an example. Banks were freaking out over, whether they would be held liable for, not taking enough evidence of payroll. And the Treasury issued guidance that was really pretty flexible. They just basically said, look, the best obviously is if you can show me what your ADP rolls show. But, if you've got a steady ledger of outflows and, bank statements, that'll suffice. And, if you have a bunch of scrawl on a piece of notebook paper, do a little more due diligence. So again, the ethic and the philosophy here has been leaning into creating flexibility for the processes of getting this money out. But again, on the other side of this is we're talking about a whole lot of taxpayer money, and so there do need to be controls. But the answer to your question, Bill, is yes. I think that if there is a denial and there's not a very clear reason for that denial, in most cases it will make sense to reapply. Right out of the box, a bunch of banks were saying, hey, we're not going to do this program because we don't get it. We're not going to do this program for anybody but our pre-existing customers. I think we're getting into a world where they're beginning to understand what they need to do, and I think therefore the net will be cast wider for more and more people.
Great, thank you. And one final thought. I know we've had quite a few, and I was just on a call prior to this with David Lehman from DECD, and he was mentioning this as well. There's a lot of concern, obviously, for these businesses that are paying rent, as Bill pointed out earlier. But from your perspective, in terms of that process and allowing a little bit of leeway, landlords allowing a little bit of leeway when, if possible, what other type of comments or recommendations you can make for these folks, these tenants that are struggling to make rent, and what can they expect from their landlords and the state?
Yeah, that's a great question, Dan, because I think it's fair to say, and Bill's absolutely right, the banks have been spectacular in the state of Connecticut, voluntarily offering up 90 days of forbearance on mortgage payments and the absence of penalties and fees. At the federal level, this is an important thing. At the federal level, any mortgage that is federally guaranteed, and this is single family home and multifamily, any mortgage that is federally guaranteed, that's Fannie Mae, Freddie Mac, VA, Agriculture Department, you wouldn't believe the number of federally guaranteed mortgages there are out there. Those are required to provide, in the case of single family homes, 90 days of forbearance. And in the case of multifamily homes, this is where it points back to your question about renters, 180 days of forbearance. And so, my hope is, I haven't seen numbers on this, but my hope is that almost all people with mortgages, including landlords, because of course, if a landlord has forbearance on their mortgage, they can basically ease up on renters. So my hope is that most people get swept up in that or get to benefit from that. The reality is that the CARES Act didn't do nearly as much for renters as it did for homeowners and holders of mortgages. And that's kind of on our list of things that probably need to get fixed in the next go round. And I'm spending a lot of time encouraging my colleagues to think about this in terms of a system, rather than in terms of good versus evil, right? Behind a landlord who may not be able to offer forbearance, of course, could be a bank that may not be offering that landlord forbearance. And behind the security at the bank is somebody who's living on a fixed income who needs those payments. So it's a very, as you know, I don't need to tell you, it's a very interrelated system. But we hope that based on what has been done, most people will experience some flexibility for the next couple of months on expenses like mortgages and utilities and other fixed costs.
Fantastic. Well, we are just about out of time. So I did want to just thank you again, Congressman Himes, for taking the time to address the business community within your district here. We sincerely appreciate it. I know, we're all trying to navigate this thing and work together on getting through this together. So on behalf of the Bridgeport Regional Business Council and our chambers, Fairfield and Monroe and the Greater Valley, I thank you. I thank you, Julio, for joining us as well from the SBA. You guys are doing good work. I know we have some folks within our office here that work directly with you. And although we're all remote, it's been a pleasure to see them working together and working with us in the business community as well. Bill, did you have any other final comments?
Well, just to say thank you to you, Dan, to Beverly, to Ray, to Jimmy Tickey, and to you, Congressman. Please stay well, stay safe, enjoy this holiday season, Passover, Easter this week, and be well. Thank you again.
Wonderful. Thank you all, and good luck, everybody.
Thank you. And for those that are still on the call, we'll take some of the questions that were through the chat and that we received and try to come up with one document that we'll share with the recording and as a resource on our resource page for you, just so you can have it as a reference. So thank you very much, everyone. Enjoy the rest of the afternoon and be well.
Good day.